Hello and welcome to Weekends with Ventura. I am Shalini and with me is Vineet. Hello Vineet.
Hi, Shalini.
So Vineet, how is COVID treating you?
Well, I'm away from COVID, so it's not treating me, and the markets are treating me just fine. We are rolling on a new high from the lows. We climbed 10,900, so there's all cheers everywhere. And the main important thing is that when companies come with good numbers, okay, then it is definitely clearly that they have survived the test of time. Pandemic was a test of the resilience of business models, and
Mhm.
a lot of the Indian companies have stood good on that. And the first week results which have been there have been pretty encouraging. So I don't
Yes.
think we are on a bad wicket.
So Vineet, I guess as usual, IT Pack has come with the first set of results. Let's take a quick review on how the results were.
Yeah,
Moving to the first one is TCS.
yeah. So if you see TCS, uh, the numbers was trifle disappointing. It was the first company that came in, but
Correct.
their guidance has been very strong. And what they've said is they've given a complete coverage to the pandemic. So I think the worst is built into price, and from here we will see growth only emerge over a period of time. And as I have been saying for IT Pack, is that they've had a decade of consolidation, and new business streams have been coming in. Old legacy business have been losing margins because of automation. So the moment the legacy business becomes insignificant in the total contribution, I think the growth will start coming out. So TCS is one company where digitization is very high, and you know, although the valuations are expensive, I think the stock deserves a place in the portfolio because it's a very stable company, continues to grow, and it provides a lot of stability to your portfolio. So although TCS at with a ROE of 33% and valuation of 26 times 1 year forward, is expensive, is the most expensive stock in the IT sector, but they have proven their capabilities, and I believe that this makes for a valuable part of our portfolio. So this is the valuation. Virtually, if you when we go through all the stocks, you'll find that they're at all-time highs. You know, the next stock that we are taking is Infosys. Again, the stock is near all-time highs. It has a ROE of 23%, much lower than TCS, but it still quotes at 24 times. And I believe that all these companies have taken into account all the costs that are there loaded onto them for the pandemic. Okay, if you see the valuation, see, as I've told you, they're all nearing their highs, right? Uh, Wipro is my top pick in the sector because the market expectations were very low. The stock has a ROE of 15%, and it has a very less PE of 15 and a half. And I'm sure that after seeing the numbers and the appointment of the Della Porte as the new CEO, I think we are going to see a lot of more agility in the company. They've also gone through, they have been the biggest underperformer among the big boys. And I believe that its time could come, so they could be a dark horse. And at 15 times forward, you have nothing to lose by making this stock overweight in your portfolio. Because as they say, fortune favors the brave. And in my opinion, this is one stock that we go with.
So as compared to the rest two earlier, this took the Wipro is better positioned.
I think it's very cheap with the new CEO, and they've shown resilience in collections and cost control and all these measures. And we are talking of a little bit of growth also coming in. Body language is positive, so I think good times could forward this stock. So Wipro is not at expensive valuations. It is trading at 15 times. We've seen the previous high was about 17, 18 times. So I think we are. This stock has a lot of catch up to do with the entire sector, and a decent allocation to this stock makes a lot of sense.
Perfect. HCL Tech, Vineet, next.
HCL Tech is a good stock. They've shown growth, but it's quoting at its it is also quoting at highs, and this has been the typical valuation range over the last 2 years for this stock.
Mm-hmm.
Okay, so until this company does not do something much more exciting than what it has been already been doing, I think there would be a little bit of a waiting game on this company. If I were to go back and look at its valuations, the stock has a better ROE than Wipro, okay, and its P is also around what Wipro trades at. So this stock could merit a little bit of buying. They've done acquisition of Cisco's self-optimizing networking technology. But this clearances would come only in 22, so that's a while before things start kicking in. Next we are looking at LTIT. Again, reported good set of numbers, 10.6 constant currency growth rate, and its BFI segment has grown almost 10%, and it has witnessed a growth of 5% in its new clientele base in the top 5 category. So I believe that, this stock is also part of a high pedigree quality stock. But, at 25 times with a ROE of 25, again, you have very little differentiation between the stocks to choose from. And so I would more go with a TCS, Infi, and a Wipro than concentrate on the second rung of stocks. And if you see, this stock has really zoomed out and is trading at its all-time highs. L&TTS is another stock from the L&T pack. Okay, order pipeline is much better, and they're expecting 9 to 10% organic revenue growth in 21. That's a very tall claim. They've said that the worst is behind them for all the segments, and it's similar to LTIT. This stock has a ROE of 23.5%, quotes at almost 19 times, right? So I think this stock uh, could be looked at buying, because if you see its valuation range is quite on the it's below average. So I think there could be a possible
Re-rating over here.
quick re-rating on this stock. Mindtree is again another stock which has been now owned by L&T, and they have decent ROEs, 20%. They're in the communication, media, and tech segment, and it was the highest in 5 years. And this is the biggest exposure because we've seen tech and media do well in these times. Okay, so we expect this stock also to outperform. Okay, and these are the Mindtree valuations, almost close to highs. If you were to sum up the IT sector, I think that much of the catch up in pricing has been done, but two pockets that we could look at would be to buy LTTS and Wipro.
Perfect, Vineet. Vineet, going forward to the FMCG sector, I think Britannia and Bajaj Consumer has come out with results. Let's see where they are placed.
We don't have to see Britannia. It's torn through, and it's on a tear, doing 27% growth in a COVID quarter and 20% growth QOQ. I think it has set the benchmark for the FMCG pack, and I think everyone will be climbing into this stock as we go out. See, you have to see 2-3 things out here. You have to see that clearly operating leverage is kicking in. If you see the numbers, your 3421 crores is the top line versus 2700 to 3000 was a range. Are you getting my point?
Yes.
You're not like 8-10% higher, you're 27% higher. Okay, 20% higher than the previous quarter. Okay, and we had seen lockdown for the first 1.5 quarters. Secondly, your margins have jumped 500 or 520 bips QOQ. Okay, and about 650 bips YOY. This is a blowout quarter, and I think, and we've seen, so you've got YOY growth in revenue by 27%, 81% growth in EBITDA, okay, and 118% growth in net profit. This stock is just screaming to buy.
Even though if it's at 52 weeks high.
It's at 52 weeks high, it's at 55 times earnings, and if they continue this kind of performance, it could go into the league of the other food stock, which I'm not mentioning out here because I don't want people to, catch my neck. But, then you'll suddenly see this stock going into a very high valuation territory. Right.
Next is Bajaj Consumer Care.
See, Bajaj consumers, oil category has not done that well. And basically, they are dealing in premium products, right? Their almond hair drops product is the core of its portfolio, and it's more of an organ product. It's more of a urban product. And here, we've seen 18% YOY negative growth expected. Okay. But compared to Q4 20, where you had 2.5 months of working quarter, and here when you had almost 2 months of lockdown, they've done 200 crores or 20 crores more than the previous quarter. So they have really done a good job. And if you see their valuations, okay, it's at 10 years low. It's like a 10 times. Okay, if you saw Britannia, which is at 17 times price to book, this stock is at 3 times price to book. So what does it show? It doubles book value every 3.5 years. So I think Britannia from the momentum category and Bajaj Consumer Care as a stock because of its extremely cheap valuations, and they have a good dividend track record. And let's see one more factor. If you see the EBITDA margins, they had really collapsed last quarter. They would have obviously taken a big hit on the inventory side of it, but they managed to claw back, and you're at 29% margin. So, they've really managed their portfolio well. They've taken a lot of steps. And, what we are seeing is a clear, control on cost, okay, the variable cost. And if you see net margins, okay, they're also at all-time highs. So I think, they have proven their model. All that they need is the growth to come back, and the growth will come back once distribution is relatively more easily available to them. So at current valuations, I think this stock is a very good investment for both the contra investor who are value pickers, as well as for the FMCG and momentum play stocks. This is, I think, one underdog which will do really well.
Perfect. Next we go to the banking segment. Federal Bank and Bandhan has come up with the results. So how would you rate them?
So, they've shown a loan book of 8% YOY, which is very, very good. Okay. And the retail book continues to grow at 16%. So that's another surprise out here. Okay. But, they're close than more than 30 to 35% of their book is in moratorium. And that is not a comfortable factor for me. See, the other banks, if you see the private banks, their moratorium book is little less than, they're in a bunched up between 25 and 30. The only two stocks which have their moratorium of book which is much higher on the other side is Yes Bank and Federal Bank. Okay. So what I think is that I would give this bank an avoid purely because of the fact that, if I had to choose between banks, I have banks which are less prone to risk. Okay. So I would look to buy this bank. If you were to look at the valuations of this bank, so, although it's available at virtually its lowest valuations ever, but if you see there, it's a price to book is 0.7. Your ROE is about 7.9%, and your NPAs are still on the higher side. So with a return on equity which is very low, okay, return on assets which is 0.7, it's a very pedestrian kind of performance, and I would not like to buy this stock.
We need Bandhan Bank.
Bandhan Bank, their loan growth is at 74,000 crores. So just let's look at the numbers by themselves. PAT is down 31%. So you had Federal Bank on the other side, just look at Federal Bank's performance, right? So if you see Federal Bank, in spite of everything, okay, PAT has grown, whereas Federal Bandhan Bank has seen PAT decline. So
Correct.
any guy who is showing negative growth, okay, there is too much exposure to micro and the most affected segments, right? So I think it's better to give this stock a skip. If you were to talk about its valuations, it's at EPS. You look at its price to book is at 3.1 times. So it's more expensive than it's 3.5 times more expensive than Federal Bank. Its loan book is not very large. It's a small bank, and they should have managed their book better. Because the size is manageable. But so I would give this stock a skip.
So Vineet, thank you for the update, the result update. I guess in the IT pack, Infi, TCS, although expensive, it's good to go. Wipro and L&TTS is a very good buy. Wherein in the FMCG, you are in love with Britannia,
Yes,
although it's very expensive and it is in 52, nearing 52-week high.
Expensive is state of mind.
Okay. Bajaj Consumer, you said, was a very good buy, and it would pick up once the threats to market starts.
See, you have you have dominance of the category in which they operate. You're at 3 times book. You're sitting on humongous cash. Okay, and your performance is only 20% down. You're primarily a rural brand. Okay, but your margins are at all-time highs. What does that tell you? You're just waiting for top-line growth, right? So I think they will get their
Once the
mojo.
distribution network is established, we should be able to do well over here.
Yeah, so once the urban, it could be a 6 month out before the numbers catch up and the stock catches up. So I think that as a value pick, it's definitely a good buy.
Perfect. And closing up, Vineet, with Bank, Federal Bank, as well as Bandhan Bank, I think we have said we can skip both of it as of now.
Yes.
Perfect. Thank you guys for being with us. Till next week. Bye-bye.
Investment in securities market is subject to market risk. Please read the offer documents carefully before investing. We Ventura Securities Ltd, its analysts and associates, with regard to the video, hereby solemnly declare and disclose that we do not have any financial interest of any nature in the company. We do not individually or collectively hold 1% or more of the securities of the company. We do not have any other material conflict of interest in the company. We do not act as a market maker in the securities of the company. We do not have any directorship or other material relationships with the company. We do not have any personal interest in the securities of the company. We do not have any past significant relationships with the company, such as investment banking or other advisory assignments or intermediary relationships. We are not responsible for the risk associated with the investment, disinvestment decision made on the basis of this video.